Hello, hello, and welcome to XLF 110% in 9 days. Let's go to work. All right. There's the end ticket, beginning ticket, end ticket. We got in this trade on the 2nd of February. We got in at 20 cents. We got 17 contracts, 12 and 5. This was a low delta. We'll look at that when we get to the chart. And we got stopped out today on last bar low because we got our ROI 100 here, and our stop out was at 42. So let's call up the trusted calculator, and there it is. So we got out of 0.42. Remember, this is options, so it's 100 contracts. And we did 17. We did 17 contracts. Total return was $714. All right, $714 minus. So let's go ahead and do the minus now. And then, you know what, we'll call up a second calculator. Oh, where are you? There you are. Okay. So we bought at 20 cents times 17 contracts times 100 because it's options. It cost us $340. So minus $340, 374. Divide that by the 340 for our gross return as a percentage, and the answer is 110% on the dot. There it is. All right. So now that we have established that, let's go ahead and go to the chart. So here at the chart, you can see where we are. We entered the trade. The trade was set up here on January 28th. It triggered on, no, we set up on February 1st. It triggered on February 2nd, and there it is. And we got here, and that when we got to this close, that was 100 ROI. It's over 100 ROI, so the last bar low rule was initiated, and that is right there, the last bar low, and opened, went up, really nice, very nice, and then pulled back, and then crossed below our last bar low exit at 40.8, and we got out at 42, as you saw on the calculator. Going over the data, this was a channel breakout. That is that the price broke above my inner line. It didn't owe us any money, so this is a pure profit. So this is a one circle profit. The stochastic was running at 81, RSI 14 was running at 53, and it was based on 60.6 million in volume, and our entry was 39.80. There's our 17 contracts called with a date of expiration of 18 February, which I'm quite happy about because we are entering the last 6 trading days before expirations, and I would love to get out of these trades before expiration. This was a Delta 22. That's what I wanted to point out to you. This was a Delta. This is a low Delta, and low Deltas entries are cost effective, but there can be consequences if it goes against you. Whereas if you have a higher delta and it goes against, you might end up only losing maybe between 25 or 40% on the option. On high deltas, you can expect anywhere between 50 to 100% loss. We have seen that in the past on some of the trades where we got out at 88% loss. But in the also too, if you go back to the channel, and let's do that. Let's go back to the channel. Let's see, we can do this, and we'll go to the YouTube channel, and there you can see where you can look at some of these high altitudes, like 190 here, 232 here, who was in the Merck 185. These were probability were low deltas. You would have to go back and look at the videos themselves to see if there were low deltas, but that's what low delta will do for you. All right, going back to the chart. Back to the chart. In conclusion, now I have been introduced to a new mentor. His name is Kappaman. He holds his private group on Sundays, and he had a very good session, and he gave me some tips on how to improve this strategy, which we are going to go forward with. And that's pretty much it. So there we are, 22 contracts, 20, they got out to 22 profit, 17 contracts, 374 minus 23 for the commissions, and one circle profit of 351. And now XLF2, because that was the second attempt on financials in the alphas, and that had a 0 owed. So that's a nice profit to be adding to the buying power. So with that said, we're going to go ahead and conclude today's report with XLF at 110% in 9 days. And I thank you very much for stopping by and checking it out.